It's question time at Alhambra Investments. You have the questions. Joe Calhoun has the answers. So, Steve, tell me what we got today.
Yeah, today I wanted to ask about the big change we're seeing in second half earnings, at least by estimates and projections, and on a sector basis, going beyond tech in terms of seeing potential earnings growth. Joe, could you maybe fill us in on some of those details?
Yeah, we're seeing a big rotation in the market too, obviously, kind of a shift to value and small and mid cap, and some of the sectors that have been ignored in favor of tech are starting to attract some attention over the last week. But I'm not sure that's really earnings related. It's related to a lot of things, mostly to the idea that the Fed's going to cut rates now. I guess the expectation is now moved up to 3 rate cuts by the end of the year, which I think might be a little excessive, but we'll see. I have no idea how things are going to develop between now and then, but that's what the market says, and that's what's driven this stuff. But on the earnings front, we're starting to see earnings come in now for the second quarter. And, first quarter, we really didn't have a whole lot working other than technology and communication services, and utilities actually too were up pretty good in the first quarter. But consumer discretionary and energy was down a little bit. Financials were down about 5%. Healthcare down 7%. Industrials really took a hit, a big hit in the first quarter. Earnings down 20%. Materials, which is kind of commodity related, down 34%. So, it was a tough quarter for everybody except for those 3 sectors that were all AI related. The only other one that really had a decent first quarter was consumer staples, up 11.5%, which is defensive. So, it's kind of interesting to see that defensive ones kind of stand out. But second quarter is going to improve. You'll see things like energy is going to come in probably at 12% or so. That's the expectation. Healthcare is going to be up big, plus 27%. Information technology and communication services are still going to do well, but we think that most of that's already factored in. But you are going to see some of these other sectors start to pick up in the second quarter. But the real big changes in the second half of the year. Quarter 3 and quarter 4 estimates are up considerably. Where you're looking at for instance, financials, 37% gain in earnings year over year in the third quarter, 43% for healthcare, industrials up 16%, materials up 17%. So it's going to be, third quarter, assuming that the economy stays about where it is going to produce some pretty good earnings for third quarter. And then fourth quarter, again, another big surge, consumer discretionary up 24%, energy up another 14%. So those are going to be, the second half of the year is going to be really good. But, the markets anticipate, so you're going to see this start to creep in during earnings season here, because you're going to see these conference calls. Companies are going to talk about next quarter. They're going to provide some guidance. And second quarter is looking good. Like I said, the expectations are not very high for second quarter. And one of the things that's interesting, we didn't get the normal, what we call a confession period. Usually the last couple of weeks of a quarter, call it the last month of a quarter, you see companies come out and say, hey, we're not going to quite meet our earnings estimate for the quarter, and the analysts mark it down. And then when they do report, they go, oh, it's better than expected. So that's why 70% of earnings come in better than expected. These companies manage the expectations. We didn't get that this quarter. There really wasn't a confession period. There weren't many companies coming out warning. And so as a result, earnings estimates that normally come down in that last month of the quarter, they usually drop an average of about 4%. They didn't budge. So I'm looking for a pretty good second quarter. And so far what we've seen that's come out, there's been some disappointments, but in general, I think the numbers have been good. We've only started. We started to get the financials. They always come in first. Some of them good, some of them bad. So, I saw First Citizens this morning was a good number. U.S. Bank Corp had good numbers yesterday. So, like I said, expect a good quarter, but the second half is going to be even better. We think that what that means is you're going to see this rally kind of broaden out. And frankly, we think that it's possible you could see some of these. You can see the S&P 493, X the Mag 7. You might actually even see that go up versus some of the tech stocks going down. Some of these things just got so extended and so expectations got so high. You may see some disappointments in the tech sector this quarter. whereas you see positive surprises in the others. It wouldn't surprise me in the least to see the rest of the market catch up. It's already doing it, particularly with small and mid caps. So we'll see how it goes for this quarter. We'll be reporting on that over the next few weeks, how things are going, and then we'll start to set up for the third and fourth quarter and see what estimates do there.
Thanks for sending in your questions. Keep them coming. Put them in the comments section down below.